this stuff is happening. And then quietly, as we see everyone standing for delivery in gold, which has been argued to be a new settlement function of a new trade, uh, let's just say moving away from the dollar. Anyways, all that stuff's happening, and you get the Russian finance minister who quietly says, by the way, this new bridge technology is now opened, will be opened to non-BRIC member countries as well. Let me just say that one more time. Non-BRIC member countries can now use the bridge system that is free from SWIFT interference that settles in 7 seconds. All of these countries will trade in their local currencies with one another, and they will settle their imbalances in gold. You open it up to the Belt Road, to the Eurasian Economic Union, to the Shanghai Cooperation Organization, all the Asiatic countries who have already signed this agreement, and now you have Japan and China and South Korea signing this contract, this new trade agreement. These are former adversaries that are now uniting against the dollar. All can trade over this new system, just like that.
Monaco 64, home of alternative economics and contrarian views. Today, I've got the pleasure of speaking with Andy Schectman, founder and president of Miles Franklin. Hi, Andy. How are you doing?
Mario, my good friend, I am well, thank you. I like your digs behind you. They suit you very well. You're very kind of regal and noble in that background.
Yeah, it's weird because we have builders at home refurbishing my office or study, and today they had an accident. They cut the broadband cable. So I was thinking, what am I going to do? So I came to my golf club. They have plenty of room.
I thought you were going to say they broke a wall and found a box of old British sovereigns from the 1800s that the previous owner had hidden away. But
Yeah, that would have
cutting
been
the
good.
broadband isn't quite as dramatic.
No, but yeah, so it was good. I thought on my feet because I thought, oh, I won't be able to do the interview. And but anyway, Andy, today we're speaking on Monday, May 12th, and we're seeing a lot of volatility, a lot of moves everywhere, a lot of headlines about trade negotiations, and there's a saying, Andy, that the truth is the first victim of war. And I think the same applies to a trade war. We don't really know who's telling the truth or not, and if they're embellishing things. So maybe we start with that. What do you think is going on, and are things really going to improve for the economy in the US and the whole world's, let's say, trading system, or has the damage been done and we're going to go through some tough times?
Mario, I think that the bottom line is this is the system that's based upon trust, first and foremost. And I think you kind of look at like the concept of the fourth turning, a system that is kind of marked by a loss of trust and trust in institutions. And the more I think about the concept of the fourth turning and where we are in the cycle, it just seems to me that this is much bigger than just these particular tariffs. It's been a string of things that have been done that have eroded the trust and confidence not only in the institution of the United States government, through things like sanctions, tariffs that are masquerading as sanctions, but also the irresponsible monetary and fiscal behavior, the massive indebtedness that seems to be continuing even in the face of Doge, which really hasn't amounted to much of anything. A couple hundred billion. They thought they'd get a couple trillion, and yet the trade deficit, or the budget deficit rather, continues to grow, and over $1 trillion military bill that is discretionary, borrowed, in other words. So the whole thing is much deeper than just these tariffs. I think the tariffs accentuate the problems, and the problems are of lack of trust. The problems are of going around and bullying the world, and right, wrong, or indifferent. The problems are of fiscal and monetary irresponsibility, a massive growing indebtedness. Um, these problems are much deeper than the tariffs would portray. And I think really what they are doing is bringing into focus to the world that perhaps it's better to, focus on building relationships within your own ecosystem. In other words, trading with local currencies, the way that many of these countries are doing. Um, you're beginning to see the demand for trading in other currency pairs and trading in local currencies and settling in other things other than the United States dollar for these reasons. So, yeah, I look, part of me wants to be very optimistic at the same time, Mario, and I understand what he's trying to do. There is no question, above all else, there is no question that, you need to protect your strategic industries. And I understand that. And maybe that's what he's trying to do. Pharmaceuticals, semiconductors, steel, critical manufacturing, all that stuff needs to be done. Sure. But I think this is going well beyond that. And I think it's kind of creating more of a, maybe incentivizing more of this de-dollarization and move away ultimately from the dollar as the single solo center of the universe world reserve currency. So I don't know if that really answers your question, but I guess I would just simply say I'm not very optimistic that we see smooth sailing in the economy here in the United States moving forward for a very, for at least the foreseeable future. With that being said, in the end, there's no question that we have to transition to these critical industries being brought back home. But I guess I would just say this is going far beyond that.
Yeah, I read a few weeks ago some research by Dan Oliver. I don't know if you've heard of him, and he was saying like how in the 19th century, from like 1830 to 1913, when there was no Fed, that there were periods of trade deficits, but there were also periods of trade surplus. And the reason it was much more volatile is because there was no central bank. There was a free market in credit. And yes, there were booms and busts. And when there's a boom, for example, credit boom, the US would run trade deficits because yeah, they buy a lot more from abroad. But then when the bus came, uh, the uh, the euphoria and all the buying from abroad importing dwindled, and then the country had a surplus. So and that's how it was. And how do you see that? Do you see uh, going forward that the only way really to fix the world's trade and money system is to go back to some kind of free market gold base or a bimetallic system? Or would that be asking for too much? And do you think the final goal for these guys, even Trump, is like a digital currency and more control?
Well, I think that it appears much of the world, at least the southern hemisphere, is moving towards a system of trading in local currencies and settling imbalances in gold. And I think you can even hear rumblings out of the White House with dissent saying that, maybe the era of being the solo reserve currency needs to come to an end. I mean, you could make a strong argument for that. It doesn't have to be a complete and total gold backed system the way that it was, but trading in local currencies and settling imbalances using things like gold would be a good start. There's no question that um, what it appears he's trying to do is make an investment in the long-term strength and sovereignty of this country. Um, national security kind of thing. The outsourcing that we've done forever has certainly made things much cheaper, kept interest rates low, asset prices high, allowed us to live beyond our, maybe arguably beyond our standard of living, but it leaves us exposed. So there's no question that this needs to be done. And you could argue that maybe this is part also of that theory of that being the world reserve currency because of, um, you know, just the reality of the fact that if you are the world reserve currency, you have no choice but to run trade deficits, and that's not really good for it hollows out our manufacturing over time. And maybe that's really exactly what they're trying to do. They're trying to maybe they realize Triffin's dilemma is something that they want to break away from and to incentivize the world to move away from the dollar as the sole settlement currency. And maybe that has something to do with all the gold that's been brought back and imported record amounts of more than we've ever seen before. um, Maybe that has something to do with it. Maybe they plan on issuing some form of a gold-backed trade settlement vehicle like the BRICS are using, or just to simply have the rest of the world no longer rely upon the dollar as the world reserve currency, and to usher in some sort of a controlled reset. I mean, I don't know. A lot of these questions are very, very difficult to answer, Mario. And there's so many things that seem to be happening at the same time that are unprecedented. In April, we saw COMEX delivered 64,514 gold contracts at 6.45 million ounces of gold, or 21.3 billion. It's the second highest delivery on record. And since November, we've become a net importer. Since January, we've imported more gold than at any time since World War II, when most of the world sent us their gold. It was the Bretton Woods Agreement. And at the same time, you had 10,000 new delivery contracts that were opened after the first day of notice. That's the second highest on record. I mean, there's all sorts of things going on here, whether it be things that are incentivizing the world to move away from taking the dollar, to massive gold coming in, making it seem like Judy Shelton might be right, where we're planning on backing some sort of a system with gold, whether it be 50-year treasuries or something a little bit more grandiose that we're not thinking about. But I don't know. I would just simply say that it seems that we're getting to the end of a cycle and it's time for some big changes. And I think we're going to see some big changes, whether we are at the whether we are the driving force of these changes or we are kind of trying to play catch up remains to be seen. But no, I think the current system, the way that it is going to change, and what that looks like, I don't know, but I do believe gold will be somewhere somewhere tied very closely to whatever system that is.
Yes, and yeah, this gold we've learned been learning since January. The news came out that the Bank of England had a 4 to 8 week delay, and then talk that 2,000 tons have gone to the U.S. Do you think this could be the U.S. Treasury, or could it be some big investors, maybe Berkshire Hathaway? They've got like 335 billion in cash and T-bills. And maybe they see that having some gold could be a good thing, and maybe that's why Warren Buffett retired, and now we've got some new blood, and they'll have an excuse. Or and I don't know. What do you also think about the prospect of revaluing the statutory price, which has been at $42.22 since 1973? Do you think that would be just a gimmick, and would it only help put gold more in the spotlight? Because some people argue they've left that price like that just to basically say that gold is not important. So yeah, just wondering what you think, why this gold is going back to the US, and whether you see some kind of maybe revaluation.
Well, yeah, I mean, look, maybe the world understands that the dollar's lost 99% of its value since 71 when gold was 35 bucks an ounce when they closed the window. And here we are now at 3,300. I think it's arguable that the petrodollar has died, Mario. I mean, I think that, you see BRICS actively selling oil and trade in yuan and gold, and it's the dollar's not the only game in town anymore. And I think the world understands that. And it's more along the lines of getting it in your hands instead of trusting the system. Gold is no longer just a hedge. I think it's being positioned or repositioned kind of as the future foundation of trade and monetary stability. I don't know what it looks like, but at the same time, you got the Fed coming in and buying 20-30 billion dollars in 3 and 10 year treasuries to stabilize the back end of the market. No one wants our treasuries. Instead, they're buying gold. So who would it benefit if we revalued gold? I mean, who's been buying it all? It's been the central banks. And um, who would it benefit? Well, it would benefit them specifically, and the BRICS nations, and now it would benefit the United States. People talk about revaluing it just to the market to market, which isn't going to do that much. It gives the Treasury 800 billion, as the Fed would issue new gold certificates, or the Treasury would, and give them to the Fed, who would give them $800 billion. And by the way, when the Fed takes those gold certificates, it doesn't give them right to the gold; it gives them right to the cash equivalent of it. So that's why I think you have a lot of people talking about revaluing it to some metric much higher than the marking it to market at 3,300 or whatnot. It's at 42.22 on the balance sheet. In the UK, it's 35 still, the old Bretton Woods price. But, if you take let me look at the numbers. I had jotted these down recently. If you look at the numbers, at least in terms of M1, it used to be backed by M1 a long time ago. Prior to 33, gold didn't back M2, just M1, which is the notes in circulation. Um, M2 would be like when you look online at your bank account and shows the money in there, it's 92% credit. That number the bank promises to pay you in Federal Reserve notes, in theory. Um, but it's just a number on the screen. Until then, it's credit. So, anyways, using the M1, which is what Mike Maloney talked about, you have M1 of 2,365 billion, um, divided by the 261 million ounces is $9,044. If you did that, every $4,000 increase would give the Treasury General account 1 trillion free and clear. Would give them, over $2 trillion to work down the debt, to back the 50-year Treasury, to do whatever, as Judy Shelton would say. But you got other guys like James Rickards, who is using different numbers and would say something along the lines of 24,000. Is that crazy? Well, I don't really think it's crazy. Yes, it would create a bunch of inflation. Yes, it's kind of a gimmick in that respect, but it would also allow us to not only start to work down the debt, but also to issue treasuries that would be pegged to gold, because you really can't do it at this level. The gold will just get siphoned away. So I would say it's certainly a possibility. I think it's uncanny that the name of the account it's held in is the gold revaluation account. That is the name of it. Can't make it up. So yeah, I think it is on the table. It is something that they think about, and I think it would benefit ultimately the central banks. It's no more silly than seeing Bitcoin at $100,000, quite frankly. And the central banks of the world own far more gold than they do have any exposure whatsoever to Bitcoin. So could it happen? Yes. Do I think it will? Maybe. Um, and I think it's ironic that it's held in the gold revaluation account, that being the name. So yeah, things are lining up to where you could actually make an argument that it could happen.
Yeah, we've seen that central banks have been buying a lot of gold since 2022. Yeah, and gold has done well. Silver has done well, but it is nowhere near its all-time high. So, do you think with this fourth turning coming, and there's usually a huge crisis in the fourth turning, either a war, well, a lot of times a war, revolution, inflation. Do you think the public is asleep to the dangers of that we could face in the next 2 to 3 years? And if so, what do you think will trigger or wake them up to the fact that they need to protect their savings with gold and silver? Because I feel like, at least here in the UK, that very few people even know about gold and silver that much. If anything, a lot of people are talking about Bitcoin and cryptos.
Yeah, I think that there is no question the more that you dig into the logic behind the fourth turning, it just seems so logical. And the differences in the way that the last four generations have been. I started this company talking to folks from the World War II era, hardworking, nose to the grindstone type of people who then gave birth to my parents' generation, the baby boomers who were kind of hippies and free thinking, peace, love, and who gave way to us, the Gen X, I guess it's called. We were the kids who grew up very independent, free, but yet learned from, I think, the accountability was still something that was very big to this new generation that we have here that have grown up kind of in a world that's insane when you think about all that they've had available to them, from information to technology to conveniences in life that generations before didn't have, but at the same time they don't have the ability to even think of buying a home these days because things have gotten so expensive and things are changing so much. When I was a kid, one parent could work and one could stay home, and it's a very, very different environment right now. And I think so many people have kind of gotten so far away from fundamentals, including sound money fundamentals. They can't see what's coming, and if you can't see what's coming, you can't get out of the way of it, and that's going to catch a lot of people off guard. I think in a big, big way. For the last 40, 50 years, the stock and bond market have been the center of the universe. That's changing now. I mean, I really do believe that. I think that younger generations are looking for different ways of investing, and it's not just stocks, bonds, and real estate. Obviously, you have cryptocurrencies and other things that you see. Kids selling, opening baseball cards online and making tons of money, doing all sorts of things that aren't just about traditional forms of investing, and that leads to these changes. And I think we are in this fourth turning in many respects. But I see it really in a system that can't be sustained any longer. This monetary system can't be sustained. The banking system can't be sustained. Maybe it's one of these big bank failures. It's bailed in ultimately that everyone has seemed to have forgotten about. But the problems of rot underneath the system are as strong as they've ever been in the banking sectors. And so maybe it's a bank failure, and the systemic nature of everything that starts to daisy chain problems, severe problems, the concept of counterparty liability, David Rogers Webb, the Great Taking, all of these things have kind of, under the Trump administration, been brushed under the rug. We don't hear about them anymore, but they haven't gone away. My guess is that there would be some sort of an event, maybe centered around the banking system, if I had to guess, and the fallout from that would wake people up. But Mario, at a level above that, there's a historic shift underway on Comex, as an example. The big money here in the United States, they know something. I don't know what it is that they know, but the May silver contract, which is an active contract, has set a record for roughly about 14,000 contracts delivered. Now, I haven't looked since late last week. It was 13,581, which was an all-time high for silver delivery ever. And the interesting thing about it is that almost 16 million ounces of that silver, 3,165 contracts last time I looked, transferred from banks to non-banks. So that would be hedge funds or family offices or sovereign wealth funds. 3,165 contracts is, well, let's see, what is this? About 110 million ounces or something. 3,165 times 5,000. That's a lot more than that. That's 15,825,000 ounces of silver were transferred from banks to non-banks. That's the third largest net sale by banks in COMEX history for a single contract. Who's standing for delivery at that level? So yeah, I think that the people in this country don't see what's coming largely. They have no idea many of the laws and rules that have been implemented to deal with problems that they don't even know exist. And at the same time, the biggest money in the United States and much of the biggest money around the world is not only voraciously accumulating commodities like gold and silver, but maybe more relevant to all of this is standing for delivery of it all. And you know, I'd like to just for a moment, I know this isn't what you asked me, but now put it in context with what's happening around the world where you have, you know, this new payment system that just came out, the Chinese payment system, the digital bridge, the renminbi bridge, that they've now connected it to 10 ASEAN nations, which are the countries in Southeast Asia, along with 5 nations in the Middle East. And it usurps SWIFT. Now, these are all the countries that are buying gold, and it allows them to settle in 7 seconds instead of 3 to 5 days. 7 seconds, no SWIFT interference, 98% less friction. All of that's great. And that's talking about what we've talked about for a long time with the BRICS. But there was a comment that came out by the Russian finance minister Lavrov the other day that hasn't gotten enough attention. And he basically said that this new payment system, forget about the 40 countries that have applied to BRICS and Vietnam, who was the last one to apply, and Indonesia, who is now fully applied and accepted the largest nickel deposits in the world. Forget about all that stuff. Focus on the Belt Road Initiative, the Eurasian Economic Union, the Shanghai Cooperation Organization, and all of these other Asian countries. All of these countries are all united very closely with the BRICS. And a lot of them aren't part of the BRICS, but very, very closely tied to it. The Belt Road Initiative is 75% of human population. The Shanghai Cooperation Organization is a massive swath of human population and is also the largest regional military and financial organization in the world. The Eurasian Economic Union, all the countries in it, and Stan, President of Belarus, has been saying those two groups need to join BRICS. All of this stuff is happening, and then quietly, as we see everyone standing for delivery in gold, which has been argued to be a new settlement function of a new trade, let's just say moving away from the dollar. Anyways, all that stuff's happening, and you get the Russian finance minister who quietly says, by the way, this new bridge technology is now opened, will be opened to non-BRIC member countries as well. Let me just say that one more time. Non-BRIC member countries can now use the bridge system that is free from SWIFT interference. It settles in 7 seconds. All of these countries will trade in their local currencies with one another, and they will settle their imbalances in gold. You open it up to the Belt Road, to the Eurasian Economic Union, to the Shanghai Cooperation Organization, all the Asiatic countries who have already signed this agreement, and now you have Japan and China and South Korea signing this contract, this new trade agreement. These are former adversaries that are now uniting against the dollar. All can trade over this new system. Just like that, things can get really, really, really interesting. And you want to talk about resetting the system, or you want to talk about a new system or the fourth turning, which leads to some sort of an event, just like that. If they turn that on, and now you have what amounts to 90% of human population with the access to trading with all of these other countries, which are the commodity-rich countries, out free from dollar interference in 7 seconds and settle imbalances in gold. Yeah, at the same time, what the Shanghai Metals Exchange just say they wanted to do, open up vaults in other parts of the world. They just started building one, I believe, if not even open one, or they're in the process of in Saudi Arabia. Trade in yuan, settle imbalances in gold, do it over the bridge platform, bang, done. And how fast does that affect what happens in this country overnight? And those are the things that no one sees coming. No one even talks about it, but yet it's right in front of our face. Now, we can play nice with Xi Jinping can play nice with us and try to remove, the barriers to trade or whatnot, but these are strategic moves that are being put in place like pieces on a chessboard, and the leverage will shift from the West massively to the East in the blink of an eye. And when that happens, these sanctions based upon an archaic SWIFT system not only become invalid, but would trigger a daisy chain of events, to your point, that no one sees coming.
And maybe that's why the big money in the US is not just getting exposure to gold and silver, but also taking delivery because in such an environment, the financial institutions that have depended on the dollar, they could get very weak.
That's exactly right.
Yeah, yeah. So, Andy, to wrap up, could you tell the viewers, because I think there's still a few more years to go until this crisis, ongoing crisis culminates. Yeah, tell the viewers how they can get in touch with you about buying gold and silver. Of course, Andy is an affiliate. He's my only affiliate in the US at Miles Franklin. And yeah,
I hope we have a few more years, Mario, because you were here playing golf here in Florida. I need to get and come play golf with you in the UK before everything goes pear-shaped. Let's hope that never happens. I got three kids. Excuse me. It's also a true honor to have a relationship with such a fine person as yourself, and I mean that sincerely. People can reach out to us at info@milesfranklin.com and say that they heard about us on your show. We will offer them a price list that we do not publish that will be as good or better than anywhere in the country. We will provide whatever level of service they want, from none whatsoever, just requesting the some information or the price list, or white glove service all the way down to placing an order and making sure it gets delivered free overnight, gold by FedEx or FedEx ground, and following it the entire way. So it's an honor to work with you, Mario. Any way that we can answer questions for your listeners, info at Miles Franklin, no obligation, info at milesfranklin.com, and came from Mario. Don't know why that was so hard for me to spit out, but anyways, it's an honor, Mario. I appreciate it.
thank you, and it's an honor to speak with you as well. And for the viewers again, there's some details, more details about how to get in touch with Miles Franklin in the description of the video. Andy, I hope you have a great rest of the day. I hope your golf game is doing well, and we'll talk soon.
Kind of schizophrenic, but that's okay. And I look forward to chatting with you soon, buddy. You stay well.
Thank you.